Okay, let's take a look at the cost of goods sold section. If you recall the last time, we were looking at the transactions here for XYZ company, and we went through and looked at each transaction and went ahead and posted these transactions to the individual accounts here and made sure that the accounting equation that we have up here um, pretty much stayed in balance. And we kept the running totals over here so that now we have a zero balance. And the last transaction that we started looking at was the physical inventory. Okay, after these transactions are posted, now it's the end of the year, and your company is getting ready to prepare the financial statements. And the first thing that we did, well, the first thing that the company needs to do is to go out and count the inventory on the floor. And when we did that, we found that the physical inventory shows that we have $250 worth of inventory on the floor. So how do we account for that? How do we get this $250 to become a part of the entries that we posted here so that we can have it on the financial statements? The first thing, let's take a look at the this tab here. This is the cost of goods sold. Basically, the setup is something that you really should get to be very familiar with. And reading through the text in the course, you probably, or you should be pretty much aware of the, or familiar with this setup here. We start with the beginning inventory. And did we have an opening inventory over here? No, because we started the business from zero. We started from scratch. So basically, our opening inventory was zero. We didn't have anything to start with. However, we did purchase, okay, so the formula for the cost of goods sold, basically what we're doing, what we're trying to do here is simply to calculate how much did it cost us? How much did we pay for the merchandise that we ended up selling? Remember, we sold $2,800 worth, but that's on the retail end. But how much did that cost us? Because we had to match the cost, okay, according to generally accepted accounting principles, we have to match the revenue with the related cost. So when we show revenue on the income statement of $2,800, um, that cost us something to sell. And what it cost us is what we paid for the purchases that we did. Excuse me, remember the $1,000? So we purchased $1,000 of inventory, merchandise. Okay, we're going to assume for now, you already went through some of the exercises with freight and purchase returns and discounts. So we don't have any here. Let's assume that all of that is included in the $1,000. And so that's the only purchases we had. And if we had freight, that is, if we paid shipping, maybe you want to put that separate. If we had returned anything during the year, that also would be offset, would be an offset against the purchases account. And if we had purchases discount again, that would reduce the purchases amount that we have here. So basically, because we're not including any of this in here, so the total purchases comes out to be $1,000. And that's the same $1,000 that you notice that we have here, okay, under purchases. Now, this $1,000, and then now we have, that's what we had to sell for the whole year. And when we went on the floor, we counted, we realized that we have $250 left in inventory. And now it's 1,000 minus what's left equals $750. That's our cost of goods sold. That's how much it cost us to sell the inventory that we did. Now, of course, there are some other details related to that, and you looked at some of the inventory costing methods such as FIFO and LIFO, and Hopefully we'll be able to include some video clips of these calculations as well as we go along. And so basically for now, this is what we have. So it costs us $750. Now, and the reason I put this account column here, this is just this this shows you what account we're going to post this information here. And basically, once you've set up this little formula here and you calculated your cost of goods sold, the next thing you want to do is you want to come down and then you want to create a journal entry that you are going to include on not on this worksheet here. We're going to look at that when we look at the trial balance and the accountant's worksheet when we do the adjustments. Because typically when you calculate the cost of goods sold, that is going to become a part of the adjustments column on the worksheet before we prepare the financial statements. And so the journal entry that we are going to generate is that we are going to debit, okay, we're creating the cost of goods sold based on the information we have up here. And now we are going to debit cost of goods sold for what it comes out to, $750. Inventory, we are going to debit also because now we realize when we went on the floor, we realize that we have an asset sitting out there. We have $250 worth, and so we have to put that on the books, and that's $250. And now when you add this plus that, it's going to give you the purchases. So because we are creating this cost of goods sold account, we don't need the $1,000 sitting in the purchases account anymore. So we have to empty it out. We have to zero it out. That's why we're crediting it here. And again, you see that we're still in balance. Okay, debit equals credits, and that's basically it. That's the journal entry. And when we look at the trial balance and the worksheet, I don't want to click on it now. We'll look at it in the next session. We are going to include this adjustment into the adjustment column of the worksheet, and you're going to see how that ties in very nicely together when we look at the next clip in the other session. Okay, so that's basically it for now. Again, just keep in mind that when you post your transactions, don't look to adjust the cost of goods sold. Don't look to post the inventory balance or the cost of goods sold as a single item on here. You have to actually go through and calculate the cost of goods sold, and then once you have the numbers in front of you, then you do your journal entry, and that's the journal entry that's going to get carried over to the other worksheet. Okay? All right, that's it for this session.